Welcome to our Voices of Africa podcast, brought to you by Africa Practice, a strategic advisory firm supplying insights and advocacy solutions to corporations, investors, governments, and foundations in Africa. In a world with complex and interdependent challenges, we take the guesswork out of business engagement. We enable our clients to see more clearly in order to drive sustainable and equitable development.
Welcome to another episode of Voices of Africa. I'm Daniel Turler, Principal Advisor at Africa Practice. Over the next few months, our podcast series will be focused on important elements of the conversation that will unfold at Mining Indaba 2026. In partnership with the Hive Group, we'll be exploring the concept of additive mining and how mining in Africa can enter a new paradigm based on both partnership and shared value. Partnerships are a key theme for next year's Indaba, so we will be speaking to industry leaders to learn more about the contributions the sector has and will continue to make to genuine social and economic change across Africa. The African mining landscape is shifting rapidly, driven by seismic changes in leadership, trade, energy demand, and commodity prices. This has highlighted the pressing need to realize strategic, value, cultural, and structural alignment with both host governments and citizens. African governments are today focused on maximizing value from their mineral endowments. Institutional investors are exerting increasing pressure on mining companies, driven by heightened expectations around environmental, social, and governance performance, demands for optimized financial returns, and scrutiny of strategic direction in the face of the energy transition. Today, we have the privilege of speaking with Stewart Bailey, the Head of Sustainability for AngloGold Ashanti. AngloGold Ashanti is one of the world's leading gold producers and a long-term investor in Guinea's gold sector at the Sigiri mine in the north of the country. AngloGold has been operating Sigiri since 2004 in partnership with the Ghanaian government, who hold a 15% stake in the operation. Stewart works closely with stakeholders vital to the success of AngloGold's global asset portfolio on a daily basis. Stewart, thank you for joining us today. It's great to have you with us.
Thanks, Daniel. Good to be here.
Stewart, Guinea really does feel like a fascinating case study in change at the moment. Simandou is radically transforming the face of the country. Infrastructure is being rapidly deployed, and the country is really starting to integrate with international financial markets. For the industry, for mining, it's also an example of how the industry can partner with the host government to drive genuine economic and social change. We're very keen to hear more about how AngloGold is contributing to that. For decades, you've been the single largest gold operator in Guinea. As I said, we're very interested in the additive mining philosophy. And beyond tax and employment, could you articulate the deeper, longer-term investments that have been made that have really been the foundation of your operational resilience in Guinea? If you could tell us a bit more about the trust and stability cultivated in the country and how that's really supported your continued success in a market which has often been perceived as somewhat volatile.
I'll say, thanks, Daniel. It's a good question. But in the first instance for us, Guinea is and has been a sort of cornerstone operating jurisdiction for us for more than 2 decades. It is, one of 10 assets for AngloGold Ashanti. And it sort of is somewhere between the 250 and 300,000 ounce a year mark. So it is a bigger than average asset in the world of gold mining and would be, again, one of our sort of mid-range assets in terms of size. What really sets it apart is that geology in Guinea is spectacular. We're in Upper Guinea, which is up near the Mali border, and we really feel like we have a large concession. We have an important operation for the country and for AngloGold, but there is great potential that exists for us in Sigiri from a geological point of view. Now, what we've identified and long since known is that in order to really unlock that geological and economic potential for us, for the government, which is not only our host government, but also, as you mentioned, an equity holder in the asset, is that we need to have the buy-in from a host of stakeholders in the country. And important to orientate ourselves. Siguri, as I mentioned, up near the Mali border, is a relatively remote place, but it is a busy place, it is a vibrant place, and it is a place that is growing in population all the time. A lot of that is to do with people coming into the area, attracted by the sort of economic vibrancy that it offers, but also the fact that there's gold in the area. And we acknowledge that at today close to $4,000 an ounce, that's a pretty attractive commodity for almost everybody. And you see that informal artisanal mining in the region more generally, not only in Guinea, but is obviously growing along. So important for us to make sure that we can operate safely, and that we have the buy-in not only from the Guinean government in Conakry, but also from the appointed and elected leaders in that area, and also for traditional leadership, youth structures, and other structures that have existed long before we got there and will still be there long after we've left. And the reality is that is an iterative process. It's important for us to really understand who our stakeholders are at all times, because they do change from time to time. Make sure that we're engaging very carefully and very closely with them. And importantly, I think, this would be 101 for any mining company, is making sure that we are contributing to those local economies in a way that is tangible. And, therein lies the challenge, is to make sure that this sort of extractive process that we are engaged in is leaving behind some real value for the many tens of thousands of people that live in close proximity to the mine, but also to our host government, Conakry, who depends on those revenues and those benefits to disperse more widely in Guinea.
Thanks, Stewart. When we caught up in Johannesburg a few months ago, it was fascinating for us to hear how your investment in areas like agriculture, water, and health has gone way beyond what we would conventionally define as CSR, or corporate social responsibility. We'd really like to get into some of the detail around your strategy for investments around Sigiri. It's also really interesting for us to hear a little bit more about how your long experience, those 2 decades, have informed that approach, and then what some of the other learnings from across other markets, particularly in West Africa, might have been.
I think something that we've been moving towards over the last 5 or 6 years or so has been to really extend the arc of our investment in countries and try and move away from classical CSR as it's been done in many places historically, which would be sort of annual budget, annual projects, and try and have these much longer term projects where we have more ambitious goals. And we believe in order to sort of strengthen social license to operate, that really is the key, which, sounds like common sense. These are often very difficult projects to, not to conceive of, that's the easy bit, but to make sure that they're properly executed and embedded with proper buy-in from all the stakeholders, and then that they're sustained at the level that we would need them to be in order to make sure that local communities understand that we have really their development and best interests at heart. So what we've looked at, and again, we approach these projects with what I hope is a proper degree of humility, understanding that they're not always perfect, but really with an open mind, open hearts to sort of understand how we make them better at all times. So the way that we've approached this is really to say, the pillars that we would build our sustainability strategy on in Guinea would be access to reliably clean potable water, better health outcomes for local communities, and then alternative livelihoods to traditional artisanal mining for those who would want them, and to help diversify the local economy in ways that themselves are more sustainable. Because as much as we would all like, unfortunately, gold mines are not forests that don't replenish themselves, and at some point they'll be exhausted. So if we start off with the potentially with the better healthcare outcomes, we have what we believe is the best public-private health partnership on the continent for any corporate. And that is a long-standing project that we have in Obuasi in Ghana's Ashanti region, which we embarked on in about 2005 when we had malaria cases that were sitting above 80 or 85 cases per 1,000 people, which is an extraordinarily high level. And when we had the business combination with Ashanti that provided us access into these new assets in Africa, including Obuasi, we saw the opportunity to have a really big impact early on. And the biggest social risk, the biggest health risk, and the biggest business risk sort of converged in the malaria problem. And, that had issues for absenteeism, which were enormous, for obviously huge health jeopardy, infant mortality, lower development outcomes for children, and the list went on and on. And AngloGold at the time embarked on this incredibly ambitious project to map every structure, every household, and take a census of all the people in the area, and then to embark on this campaign of applying larvicide to standing water bodies, eliminating those standing water bodies where that could be done, and that meant mending potholes in some areas or other places where water gathered, and then sending out really an army of young people with these sort of backpacks with larvicide on to do what's called indoor residual spraying in homes, in businesses, in other structures around, covering, and again, tens of thousands of people. So the ambition of this was sort of unparalleled. If we fast forward now, 20 years later, what you have in Obuasi from those very high numbers of plus 80 people per 1,000 cases, the cases of malaria are now 2 per 1,000 people. So it's almost entirely eradicated. And what that's done for us is provided, I think, a very good template. We've managed to get that similar outcomes in Tanzania, at our Gator operation, at our Idiopreme operation, also in Ghana. And for one reason or another, it's been difficult to apply the same program in Guinea over the years. And, again, for reasons, some of them exogenous to us, some of them, probably self-created. We've got malaria cases in Guinea that are now 30. And that's obviously much better than where we started off at Obuasi, but it's not nearly as good as where we have. They're still 10 times higher than we have in Tanzania and, 15 times higher than what we have at Obuasi. So what we've done now is we've started that project. We're using the Obuasi template, and we're going full steam ahead in about 37 communities around Siguri to have a similar outcome, which would take, over the next 2 to 3 years, we would hope to see this very steep decline in cases that we saw in Obuasi, and hopefully remove, one of the big impediments to further developments in that region, that we see. And again, we're putting significant resources. We are going to have almost 200 people engaged in this indoor residual spraying program. We're deploying some of our best medical staff onto this, from our Koron hospital, which we have in Siguri. And in terms of sheer on-the-ground impact, we think this is probably the most exciting of our CSR projects. There are others around water, again, putting deep boreholes in around those same 37 communities in Siguri to make sure that people can rely on water, because obviously there's impacts on surface water from the large-scale artisanal mining that occurs in the region. So to have clean access, good access to water is fundamental. It's important. You mentioned partnerships as we came into this discussion. And I would just say none of these, not the malaria program, not the mobile health clinic program that we have initiated, not the water program, happen in isolation. We have close dialogue with local communities, but importantly, very close support and dialogue with the government, with the national government in Conakry, so that we can make sure that these programs dovetail properly with their own national health imperatives. And we can say that we couldn't be happier to have, a better working relationship. They've been fabulous every step of the way, which is why we have a great degree of confidence and comfort that these programs will work.
It's fascinating that the scale of what you've been able to achieve is incredible. I suppose a big part of that success and that ability to roll out something at that scale has a lot to do with local resonance and trust. And I think a lot of that relates back into building an identity for the operation that can be genuinely Ghanaian. And I think it's one of the mistakes I've seen mining companies make across Africa repeatedly is that they still seem Canadian or Australian or South African or American rather than building a face which is genuinely local. So, we were talking very briefly before the podcast about your Ghanaian team. I'd really like to understand how you've built that team, that local presence, and what that does for you in country. So, Ghanaians sharing in the company's success and being able to contribute to these transformative projects. I think it's a key element of why things are working.
Yeah, I think that's right. And again, we start all of these conversations with that sense of humility so that we understand we can do better in almost all of these areas, and that these endeavors of ours are not, they're not science. So, these are not formulas that you basically apply and with a certain number of inputs, you get a predictable output. And so we're always looking to improve, to tweak, to do better in almost every area that we work on, particularly with respect to CSR. What we are proud of is an incredible team in Guinea. We have frankly, incredible general manager at the mine at Siguri. His name is Mamadi Kouyaté. He's been with Anglo Gold a long time. He understands every facet of the operation, not only technically, but has a very deep understanding of local communities, local customs, local culture, language. And, I think he infuses our operation with that sense. Our operation is overwhelmingly Guinean. We do have expats in the operation, but, something that we've seen as a sort of strategic imperative for a long time is not, on the one hand, understanding that you may need expats in some roles from time to time, but really trying to make sure that we are uplifting and empowering locals in every area as much as possible. We have another fabulous sort of our most senior stakeholder engagement, a specialist and professional in Guinea, Diaby Abdulrahman, who's based in Conakry, again, been with the company for decades. He was a former GM at Siguri and is now the quarterback for all of our stakeholder engagements in Conakry. And again, deep understanding of the knowledge and the people. And then at every level through the operation, going into mining, in operations, people who, in processing, people who are familiar with the operating context, and again, like I say, a remote operation, logistics can sometimes be challenging. Stakeholder engagement is important and comes with its own challenges. But we have people that are aligned without having to be extensively briefed on what that alignment looks like. People who understand how important it is that the operation is working for its shareholders, but also that the operation is giving back and having a positive impact in the community. That is an uneven process over time. Like I say, we are the first to admit we're never perfect, but we do feel like we're getting some real traction at the moment on some of these big projects. And there's more to talk about on that front, I'm sure. But just to say, healthcare, water, agriculture, renewable energy, these are things that we believe can be transformative for that community, which, because of advances in technology, for example, in renewable energy production, remoteness from the capital, remoteness from the grid, need no longer be the impediment that it once was.
Yeah. And I think that that's even more important when we see the impact Simandou is having on the country. So, it really does feel like Guinea is going to be unrecognizable, both as an investment destination, a partner in the international financial system, and a mining jurisdiction in the next few years. So if we just reflect on the last season of this podcast, we spoke to Abubakar Koulibaly and Ismail Diakite, so two of the key figures involved in delivering Simandou. And, it's incredible to see that impact, what a mining project can do in terms of transforming a country. It's interesting, I think the gold sector is not a forgotten player in this change, but I do think it's obviously playing a less prominent role than iron ore. It's really interesting just to hear your thoughts on how AngloGold Ashanti sees itself complementing that change, adding momentum to it, and then supporting the government's shift as Simandou 2040 as a policy initiative starts to have a huge developmental impact on the country.
So I think just as a corporate citizen in Guinea, we are hugely encouraged by the trajectory that Simandou is on, and that the iron ore sector in general is on. And I think it's important to diversify any economy away from a single commodity, in which case gold has been the dominant mining product along with bauxite in Guinea for a long time. And obviously to have a very big new entrant into that sector, I think is good news for us. It's good news for the government, good news for the people of Guinea. So we're supportive of that. I think the progress that those projects have made of late is really testament to careful stewardship of investment of the regulatory regime over the past number of years, as we've reached this moment where we are now, where these ambitions are close to being realized in Guinea. And again, you just have to be in Conakry, just have to travel around Guinea to see that impact, and you can feel that there's changes afoot. So credit to the architects of the change, and credit to the people in the administration who've pushed that change through. As you've said, gold by definition would play, potentially a smaller role in the formal sector, but important to recognize that, first of all, you've got the much higher gold price. So its contribution, the gold sector's contribution, has been growing all the while. And then also, obviously, as informal mining in general in Guinea and in the subcontinent more widely has been growing at quite a clip with a higher gold price. So I would say that gold, more broadly defined, is still a huge contributor to the overall economy in Guinea. And we see the formal gold mining sector's contribution as incredibly important as a source of near-term cash flow to the government, but also we hope as a growing portion of the economy as we start to exploit the geology in a very responsible way going forward, to make sure that we're keeping pace with our bigger cousins over in the West.
Stewart, and I think that's going to be a recurring theme for the industry as we push towards 4,000, which is an absolutely staggering gold price to be thinking about. If you bear in mind, 20 years ago, we were still journalists together and we were talking about $350 gold and what that meant for the industry. It's mind-bending to think about a $4,000 gold price and the implications of that. So, those record prices obviously have huge upsides, and we're seeing just how much exploration activity is exploding across the continent, how investors are turning their attention to it. We've also seen, interestingly, how gold stocks are outperforming AI-related stocks, which I think is a fascinating point the market is missing. So if you could just reflect on some of the upsides and some of the downsides that you might need to deal with.
Yeah, so let's start with the upsides. The obvious ones are, tax receipts will be going up. There'll be more exploration activity. There'll be more development generally and more capex spent the longer this price is sustained at these levels. So it's a fairly wide sort of net of benefit that's going to be passed over countries lucky enough to have big gold endowments, and Guinea's, right at the front of that queue. I think as we step back and look more generally across the continent, our imperative is to make sure that we are operating our mines carefully, not getting carried away at the higher price, focusing on cost, making sure that that benefit accrues as it should to our stakeholders, but also making sure that our business is properly capitalized, that we have a strong balance sheet for the inevitable downturn in the cycle whenever that happens. And again, there are people far more qualified than I to sort of pick where that moment may be, but it's to make sure that we reinvest appropriately in the business, in our assets, including in Seguri and others, so that these assets are still producing in 10, 20 years' time and giving that benefit to those countries. We've lived through enough periods of austerity just to know that, again, the benefits to the employment levels, to the value chain, to contractors in countries, to all the various participants in the value chain, that they'll be benefiting from this moment in a far more predictable way, that there's not the uncertainty that comes with lower gold prices where people are reluctant to invest. So again, it's a good space. On the downside, we would say in the first instance, what you're seeing across the world at the moment, from Latin America, Southeast Asia, into the Pacific, into Africa, is this proliferation of illegal mining in many cases. And, again, we are very careful to differentiate between traditional artisanal mining and illegal mining. And the incentives to participate in that illegal mining are obviously much, much higher now at $4,000. So it's for governments to figure out how do they harness gold's qualities or attributes as a material that will reduce poverty and provide subsistence income against illegal activity that comes in, create sort of industrialized level destruction of ecosystems, of water bodies, and leaves that burden on the state to handle in the longer term. And that's a very clear and obvious issue, and all of the attendant woes that come with illegal mining. So that's something that we're engaged with our stakeholders in government on. We would say it's probably the biggest single challenge for the industry in almost every country to deal with. We see it here in South Africa, and again, it's not unique to one place. It's in Zimbabwe, it's in Mozambique, it's in all the way up through East Africa as well.
Yeah. It's an extraordinary time for the industry in so many ways. I think adding to that element of complexity has been, this year from a development perspective, has been absolutely extraordinary. We've seen scaling back of traditional development aid and grant funding from many first world markets, reducing their commitments, but particularly the US. It's interesting to explore how this has impacted your commitments and what you're thinking about in terms of planning to adapt to this change. So obviously your commitments won't change. I think at this gold price, if anything, they would be deepening. So interesting just to hear how you're planning on bridging that gap and how, more broadly, how you think that gap will be filled.
Again, I think don't have a full sense of what that change in development funding looks like yet. There are a few anecdotal examples that I could offer, some projects that we've been involved in, for example, a cashew project that had some big external donor funding and donor partnerships that have fallen away. And I think we hear similar anecdotes all the time. So again, early for me to make a judgment on that. What I would say is that our social license to operate view doesn't change at all. And that's the benefit, I think, of having a large formal mining company operating in the country in whatever sector, is that you can look through these cycles, whether they be the economic cycles or the donor funding cycles or whatever they are, is that we will keep, as you say, in some cases be deepening our commitments. Certainly that's where we are in Guinea at the moment. on the malaria projects, on the water projects, on the renewable energy projects. So making sure that there's as much benefit going to those local stakeholders as possible so that we can strengthen our social license to operate. And, you know, we'll chat again in a year's time and see where we're at, see how those projects have fared. We will, I'm certain, be getting lots of proposals, lots of partnership proposals, and we will look at each one of those on their merits. But they really have to fulfill our overall strategic objective, which is how do we strengthen the license to operate? How do we make ourselves the development partner of choice in that region in Upper Guinea where we operate? And we're as committed to that as ever, but mindful of the fact that these changes at the multilateral agencies, at the big donor agencies, will inevitably have an impact on us, and we need to monitor that very carefully. But, you know, without necessarily saying that we're going to go and plug a gap that is left, that may create an opportunity elsewhere for us to invest and for us to improve these outcomes for communities.
Yeah, it's a fascinating time to be working in the industry. I think we always say that it's never boring, but I think it's just getting more and more interesting, and addressing the change, fulfilling the need, and finding new ways to partner and new ways to overcome challenges is going to be one of the most fascinating things about working in Africa and working in mining in the next few years. So Stewart, thanks so much for the insight you've provided us with today. It was invaluable. So interesting to hear from a company that's progressive, that takes these commitments seriously and thinks about the challenges, and fascinating to hear how you approach these often complex problems. So thank you for your time, and we look forward to seeing you at Indaba next year.
Thanks very much.
Thank you for tuning into a Voices of Africa podcast this week. Voices of Africa is a forum where Africa's leading experts weigh in on cross-sectional topics affecting the continent. Experts share their views on how we can unlock greater value that will benefit industry, government, and communities. For more of our insights, visit our website or subscribe to our weekly newsletter, Views on Africa, in the description.